Hiya, welcome to my Compound Life. This is a channel where we build assets, we build great habits to manage all of our assets, and we build freedom, and that should hopefully be financial freedom for yourself, myself, and everyone that watches this channel. If you haven't already done so, please hit the like, hit subscribe, become one of my subscribers. Even if you don't like the content, just hit the like anyway, right? That will help me out completely because I'm such a small content creator, right? So I'm currently really lacking the subscribers. If you are fortunate enough to become my 37th to 40th of subscribers, please drop a comment. Let me know who you are. So today we're gonna talk straight about Bitcoin price prediction. Okay, so straight talk with me looking into your eyes and breaking down what's worth listening out there in the market, right? Because plenty of noises, plenty of new prediction are coming out. And I just want to give you my takes, right? Plenty of bold calls out there right now, especially around early 2026 moonshots, right? So let's unpack. And I hope in the video I can give you my very, very honest take of price prediction, okay? So two of the loudest bullish voices right now are calling for a massive upside very, very soon. HAYES sees Bitcoin grinding between $80,000 and $100,000 through the rest of 2025, then jumping to around 124,000 early next year and potentially hitting 200,000 mark by March 2026, all driven by Fed liquidity coming back strongly. Okay. Secondly, Tom Lee also super optimistic on Bitcoin and crypto right now, especially Ethereum, with new all-time high potentially around $200,000 for Bitcoin as early as late January or Q1 2026. He's even more vocal on Ethereum, calling around $7,000 to $9,000 by early 2026. So essentially tying Ethereum with the need for tokenization, stablecoins, institutions, adoption, and so forth, right? But hang in there, right? Hang in there, because now before we go further, let's talk about Tom Lee in more details, because his position gives some real context to why he's out there pushing these bullish narratives so hard. As I've mentioned in my earlier two videos, if you haven't seen them, go check them out. I've covered how Tom Lee has this pattern of publicly calling for Bitcoin and Ethereum to go much higher, getting everyone excited, getting retail excited. But then in his private advisory club at Fundstrat, he's actually been advising clients that Bitcoin could go lower in the short term. Okay, so he's like kind of advising people not to buy or to sell and be prepared to re-enter when Bitcoin or Ethereum goes much more lower, right? So it's an interesting contrast, right? Publicly, it's all moonshot hype. Privately, it's more cautious or even bearish warnings. So it makes you wonder about the motivation behind the public side. And here's why that matters. So Tom isn't just a neutral analyst anymore. He's the chairman of BitMine Immersion Technologies. So the ticker symbol is BMNR, a public company that's gone all in on Ethereum at its core strategy. They've been aggressively buying Ethereum ETH. And as of right now, they hold over 4 million tokens of Ethereum ETH, which is about 3.4% of the entire Ethereum supply. So that's pretty big, massive, in fact. We're talking about $12 billion worth of Ethereum at current prices, plus another billion or so in cash. So their whole play is to keep stacking ETH or Ethereum, and they fund it by issuing new shares of their own stocks, where they sell shares, raise cash, buy more Ethereum, rinse and repeat. And that's what they do for BitMine. It's like a self-fueling machine, but it only works if the market stays hyped and if price hold up or go even higher. Okay, so now let's get into the incentive side for Tom Lee, because that kind of explains why Tom Lee is so bullish on Bitcoin and Ethereum. So Tom Lee's compensation at BitMine is tied directly to hitting these ETH holding milestone. So according to the details that have come out, Tom Lee stands to get up to $50 million bonus if BitMine reaches 5% of the total ETH supply, right? So that's their stated goal. On top of that, there's a $15 million upfront payment coming to Tom Lee's upon shareholders' approval, which is set for January the 15th, 2026. And don't forget the performance stock units, 500,000 PSU if they hit 4% of the ETH supply, and another million if they get to 5%. So that's some serious money, guys. And we're talking about tens of millions in cash and equity, all contingent on that ETH treasury, right? So does he have? So Tom Lee now has that duty to encourage and hype the market, because he's obviously the chairman for BitMine, and it's part of his role to promote the company's vision, right? When he goes on CNBC or posts on X about Ethereum exploding to $9,000, I think at a certain point he was, promoting that Ethereum can potentially be getting into $16,000 per Ethereum, or Bitcoin hitting $200,000 soon. It's not just opinion, it's aligned perfectly with BitMine's need to keep investors' interest high so they can issue more shares without tanking the stock price. So if ETH dips too hard or sentiments turn sour, that whole strategy crumbles. And remember, in those previous videos, I pointed out how his public calls for higher prices contrast with the more tempered advice in his own private club, like warning about potential Bitcoin pullbacks while publicly saying buy the dip for Bitcoin, Ethereum, and so forth. It's going to the moon. It's not about calling him out as wrong. It's about understanding the full picture, right? So you guys get the picture. You guys don't just blindly believe what Tom Lee talks about or believing in his price prediction, right? You got to sandbag all of their prediction and watch more of my video too, right? So everyone got angles in his space, and knowing them helps you make smarter decisions on our portfolio, right? Because that matters more. Not what's their price prediction, but on our portfolio, what would be a more conservative price prediction that we need to follow, right? So that's something I've learned after multiple Bitcoin cycles, right? Not to trust anyone, especially some person on the internet. So even after you listen to my video today, maybe what you might want to do is to jot down every single person, influencers, advisors' price prediction and start to take a more conservative look at your portfolio and decide when would be your right time to take profit. Okay, so definitely not at the highs, but certainly remind yourself to constantly take profit whenever we get a certain uplift. Okay, that's very, very important. Now let's talk about Arthur Hayes, right? So shift our thinking to Arthur Hayes because his action around the market also adds some important context to his bold prediction. So we might remember the big crypto flash crash back in October 11th this year. Bitcoin dropped from around 126,000 to much lower in a matter of hours, with nearly $19 billion in liquidation, liquidation long, and the overall market losing hundreds of billions afterwards. It was a brutal shakeout, and it's been called a turning point for 2025. Just before that crash, in late September, specifically on September 21st, Arthur Hayes did sell off his entire position in Hype. So that's Hyperliquid token. That was about 5.1 million worth, $5.1 million worth at that time. So right near a local top around $52 to $53. So he publicly did explain it as taking profit due to upcoming token unlocks in November that would add heavy sell pressure, plus concern about competitors undercutting fees and revenue not being strong enough, yada, yada, yada. He even said he still believed in 26x potential by 2028, but short term it was time to reload lower. So yeah, he front ran some downside there and on that specific altcoins. But here's where it gets interesting. While that was a smart move related to the Hype token, Hyperliquid token, before the broader October crash, his biggest sales actually came after the dip. In mid-November, on-chain data shows he offloaded nearly 1,500 Ethereum over one weekend, plus other altcoins like I think he offloaded Lido Finance, Uniswap, Aave, and so forth, totaling over $40 million in sales across the past months or so. So just today, report came out, him sending another 500 Ethereum worth about 1.5 million to Galaxy Digital. So he's definitely been trimming position at a loss in some cases, even as he's publicly insisting Bitcoin will hit 250,000 by year end or by March 2026. Does this mean he's not bullish? Not necessarily, right? So Arthur Hayes has a history of timing market well, making hundreds of millions from spotting tops and bottoms. But it does highlight that even the biggest bull de-risk when they see liquidity driving up or narratives peaking. So he's not dumping everything for sure. He's rotating maybe into stable or waiting for a better entries. Still, when someone who's predicting a massive rally is actively selling during a dip, it's worth noting it could be a disciplined portfolio management, or it might signal cautions on the short-term path. Okay, so short-term path might be we're not getting a bull market all-time high at any time soon. Okay, either way, it reminds us that prediction are one thing, but action, like what Arthur Hayes are doing, speaks volumes. So just like Tom Lee, understanding these moves help you question the hype and focus on your own strategy. Okay, so don't just assume Tom Lee's or Arthur Hayes' prediction is absolutely correct. but sandbag your portfolio and decide when to take profit. Okay, so here's my point of view. So I just want to give you my perspective of things, the one I'm using for my own portfolio and the way I think about compounding of my Bitcoin and my compound life. Okay, so I'm not dismissing these predictions outright, right? Total respect to Tom Lee and Arthur Hayes. I'm just layering in some reality based on history and cycles. Okay, so history shows that Bitcoin bull market tend to peak roughly 12 to 18 months after a halving, right? We had the halving, I think that was back in April 2024. So that point to the strongest upside in the second half of 2025, Q3 and Q4. That's when we most likely see the real cycle top, probably somewhere in the region of $120,000 to $126,000 range. Well, depending on how, yeah. So that's essentially just following the Bitcoin cycle, right? So let me break it down in a bit more. In past cycle like 2017 or 2021, the peak came after a period of building euphoria. With retail jumping in late, we've seen echoes of that now with ETF approval and corporate treasuries like Bitmine. But it takes time for full momentum to build, right? So after that peak, so my take now is after the 126,000 peak, right? 2026 has often, based on history, has often will be a tougher year in the past cycle, right? So looking at the past cycle, the projection will be for 2026, it should really be a tough year, right? Because it will be a time of correction, consolidation, or even deeper drawdowns as euphoria fades and profit taking kicks in, right? What you can see now, Bitcoin is trying to break even 90,000. It cannot get there because there'll be enough of OGs, whales, profit taking. It will be hard to rebuild that momentum. Okay, so think about 2018 or 2022, big tops followed by 70 to 80% drops that lasted months or even a year. We could absolutely see short-term bounces early in 2026, maybe even testing new highs if the Fed really flood the system with liquidity like what Hayes predicts. But expecting a straight rocket to 200,000 by March might be asking the market to front run the cycle in a way it hasn't done before. Okay, so markets don't always follow the script. Market will not run as smooth as we want it to be, right? Especially with variables like war, tariffs, regulation, global events, or even any shifts in institution sentiment, right? Or even gold taking all mind share away from Bitcoin, okay? So when I look at Arthur Hayes and Tom Lee's timeline, I respect the logic. The Fed liquidity argument is real, ETF flows are real, and for Tom Lee's, especially the Ethereum fundamental ties directly to his company strategy. But I think they might be pulling the peak forward a bit too aggressively, right? So Tom Lee has that history of, he was calling for Bitcoin to moon by December this year, and then he eventually started to push back on his timeline, and saying that it's now all due to Fed's liquidity, the business cycle, and so forth, right? So see how he's pushing the timeline backwards. And I think Tom Lee and Arthur Hayes will be doing the same thing too, right? So, and of course, so let's think about why Arthur Hayes is betting on a quick market reaction to Fed's policy, but history shows this thing can lag. And rate cuts in 2023 didn't immediately send everything parabolic, right? It took some time. It actually took many months. So similarly, Tom Lee's Ethereum calls makes total sense for Bitcoin. If ETH hits 9,000, there are treasury balloons and these bonuses vest, right? Tom Lee gets his bonuses, his performance bonuses. But the broader market, we might need more confirmation like sustained ETF inflow or real world adoption picking up. And with Hayes selling position, even as he calls for highs, it adds layers of cautious. Maybe the path to 200,000 isn't as smooth as we think it can be, right? So be cautious. So my point of view, what do I think? My point of view, my guesstimate, purely based on the historical cycle view, where it peaked late in 2005, which already happened, followed by correction in 2026. This looks at halving dominant cycle, the sentiment pattern. So it's data back from multiple Bitcoin cycle. So this cycle could be different, of course, with institution and ETF changing the game. So my guess will be we may have some strong upside through the rest of 2025, just because we have another 8 days left, right? So I still want to be bullish, right? There could still be a small Christmas rally coming. We may get back to maybe 95,000 to 105,000 US dollar high, maybe towards the end of the year. And we could see Bitcoin testing at around 105K or more if everything aligns. So Fed easing, no major recession data, but mind you, the GDP report came out earlier, just a couple of minutes ago, half an hour ago maybe. So that could hint stronger than expected US Q3 GDP, 4.3% versus 3% expected. So potentially Fed would reduce. So potentially Fed will not reduce interest rate in January, or possibly a rate hike, right? So essentially reducing liquidity and pressuring Bitcoin short-term downwards movement more. But of course, we do have continued corporate buying. Then in 2026, we could bring in more volatility and pullbacks rather than immediate continuation to 200,000. Maybe a 30 to 50% correction to shake out the weekends and setting up the next leg up later in the year into 2027. And any big dips in 2026 would actually be a healthy reset. That's what I'm thinking. So yes, meaning no Santa rally, no all-time high, no euphoria for 2026, but I might be wrong. I hope I'm wrong. Let me know in the comment section, what do you think, right? What do you expect? Let me know in the comment section. But of course, to give you guys some hopium, There are these, so below will be some criteria that I think everyone are hoping for. Number one, the aggressive liquidity option, where Fed turns on the money printer hard, fast melt up into early 2026. This is Arthur Hayes' camp. Euphoria peak by March 2026. If the Reserve Management Program, the RMP, in reality, it's a QE in sheep's clothing in disguise, right? Asset like Bitcoin could surge as dollar flood the system. It definitely happened before in 2008 and 2020. Okay, so if inflation spikes again, of course, the Fed might pull back quickly, right? So we'll see. We'll see whether the aggressive liquidity does kick in. Or with ETF sustain, or ETF or institutions adoption sustain buying, right? Essentially, it could still bring us to a super cycle. So based on how much ETF are buying, it's not going to be a parabolic, but a slow grind, but meaning Bitcoin will not head to a bear market anymore. So steady institutional buying supports higher price through 2025 into 2026, but not necessarily a straight up of Bitcoin price, for sure. So think of BlackRock, Fidelity, billions flowing in weekly. But seriously, looking at the inflows and outflows for Bitcoin right now. So watch my daily Bitcoin video where I kind of give some coverage in terms of Bitcoin inflow and outflow. We are dealing with traditional finance investors. They will look at Bitcoin versus gold versus silver. Easily they would just choose gold and silver for their investment. So even Michael Saylor recently stopped buying Bitcoin and is stacking fiat cash instead. I think he's also sensing a bear market coming, where he's stacking enough cash to pay off dividends so he don't have to sell off Bitcoin during the bear market. I kind of see that as a pretty smart plan. So yeah, I think even with ETF and institutions adoptions leading into a super cycle, the pros is it's real money. It's not hype. Bitcoin doesn't go parabolic all of a sudden, but it would be a slow grind up. So, but look out for if stocks tanks, the money gets dry up really, really quickly. And of course, I think there's also a conservative macro view. So if Fed pauses and with new regulations surprise us, we chop around 100 to 140,000 longer than expected for the rest of 2026. Okay, so many scenarios, so many different prediction summary. What do I think? Well, obviously, I'm still sticking with my earlier view, right? I lean towards a blend of Bitcoin cycle. We had the all-time high in October 2025, accept the fact and move on, right? Get ready of your cash, get ready to stack again towards end of next year. And of course, I also take into consideration the conservative macro view, where we have a shorter term bear market next year, followed by an earlier bull market start in 2027. But hey, if Tom Lees and Arthur Hayes are right, we get that early 2026 blast off, I will be happy to readjust my strategy too, as long as I've got my Bitcoin hodl and swing back. I think all of these are in autopilot, no matter if we peak earlier next year, or if we peak later next year, or we peak sometime in 2027 to 2028. So to wrap up, don't get married to any single prediction, even the exciting 200,000 by March ones, or the hype up calls from folks with big incentives like Tom Lee, or actions like HAYES' recent sales, right? Of course, stay exposed to Bitcoin and maybe some Ethereum too, if you believe in it. Well, for transparency, I hold both Bitcoin and Ethereum, but Ethereum definitely a much smaller bag. And keep pound cost average or dollar cost average through whatever 2025 and 2026 throw at us. Of course, manage your risk so you can survive any drawdowns. So for me, I'm still relying on my properties income so I can live through the drawdowns, of course. So that's why you need to have a hollow bag as well as a swing bag for your Bitcoin. And of course, the fundamental haven't changed for Bitcoin, fixed supply, growing demand, and a world that keeps printing money, right? So we're in the right asset. Thanks for sticking with me until the end of this episode. Drop your own timeline in the comment. Are you bullish for Santa rally for 2025? Are you with the early 2026 crowd like the Tom Lee or Arthur Hayes that Bitcoin will peak by March 2026 of up to 200,000 USD per Bitcoin? Or do you see the peak coming later in 2026? Or are you, like me, expecting a dead cat bounce in early 2026? Let me know in the comment. Always great to hear from you guys. Thanks for watching. Hit the like, hit subscribe, and I'll see you in the next video.